Welcome to Elementary. I hope you're having a fabulous Monday wherever you are. My guest is going to ask me to join. I am so excited for this topic. It's not even, it's uncanny how excited I am to interview my guest today. So I hope my guest is going to ask me to join any minute. My lighting is so off, and yeah, perfect. This is perfect. So like I said, I hope you're having a fabulous Monday. Hi, Ramona.
I am. Hi.
That is
How are you,
excellent.
Jacqueline?
I'm good, and you?
I'm very good.
So I'm glad
I
we were able to connect. And our, the guests are going to start pouring in, but we'll get started, with the show. And as people come in, I'll see in a couple of different spots about um, dropping questions if they have any, and we'll try to get to them before the end of the show. So, without much ado, let's get started. So, maybe just tell
let's.
us who you are, introduce yourself, your Instagram handle. Um,
I would be happy to. My name's Ramona Harris. I am a mortgage agent in Toronto, Ontario. I am an agent level two with TMG, the mortgage group.
Very nice. And so tell us a little bit about yourself. Now you told us about your
Oh my
company,
goodness.
but just a little bit about yourself.
Well, I hang a lot with my mother, who is a senior. I watch out for her, so I'm not very exciting. And but yeah, we're buds, and it gives me a lot of joy being able to do what I do for her at this stage of her life. It's wonderful. We're closer than we've ever been. I have a dog.
Nice.
Weather is improving, so I am looking forward to getting out with him more often and friends and getting on the golf course maybe a couple times at least this season. You
Okay.
know, yeah.
So I'm
And
not a golfer, but one day I said to my husband the other day, I think I'm going to learn to golf. I need to learn to golf.
it's it's um it's a very competitive sport, competitive in that for me anyway. Um, I compete with myself. You can go out no matter how good you play one day, you can go out the next time and just bomb. I've had days where I've lost like too many balls to even mention. And other days where it was like, oh my goodness, maybe I could sign up for the amateur pros.
Yeah, yeah, I
The
hear
game
you.
was so well, but or so good rather. But anyway, yeah, I'm hoping to get out there a little bit this year.
Perfect. I'm sure you will get out sooner than later. So let's get, I want to ask you a few questions. And today I know we talked, this is going to be a little bit of a different show. And I'm so excited um, to have this conversation with you because you've graciously, I asked you to speak about a tough topic, right? And you graciously accepted. So thank you for that. So I want to ask you today if you can tell us about reverse mortgages, and just start by telling us in simple terms what exactly is a reverse mortgage, other than a mouthful of words.
It's a lot to say. I'd be happy to, Jacqueline, and thank you. You're so kind. I'd like to thank you for extending the invitation to join you today. So a reverse mortgage is a mortgage that Canadians 55 years of age or older can access some of the equity in their home, and it is determined by age and in conjunction with the appraisal value of their home. So as an example, age 65, they would qualify for potentially 34 or 36% of their home's appraised value. Um, that's essentially it. It is tax-free, and it's designed that no payments, mortgage payments, are made.
I see. So so then maybe we get into key differences between, just name a few, between a traditional mortgage and a reverse mortgage.
Sure. I think the simplest and for the viewers that are watching, um, I'm going to really make it simple. Let's look at. I'm going to bring up the amortization.
Hmm.
Everybody understands if they've had a house, they own a home, and they have a mortgage, they understand the amortization schedule, and it shows you how much you will in the traditional mortgage, how much you will have paid down your mortgage balance or your
Hmm.
mortgage loan with principal and interest at the end of the term. With a reverse mortgage, there is a loan amount, just like a traditional mortgage. There is interest. However, the amortization schedule, technically there is no amortization. What happens is the interest rate is applied and accrues to the balance. So the traditional mortgage, essentially, the balance decreases throughout the term of the mortgage. With a reverse mortgage, it increases throughout the term of the mortgage. Does that
Interesting.
help?
Hmm. Yeah, no,
Yes.
definitely, definitely. So, what could be the primary benefits for, for a reverse mortgage for like maybe a senior or a downsizer? Um, yeah.
That's a really great question. And I say it's a great question, Jacqueline, because it really comes down to the clients and what their needs or desires are. And that can be as vast and different as people and their personalities are. Um, quickly, one couple or one of the couple may be in the mid stages of dementia,
Mhm.
and the spouse is fine and she or he has been looking after the one experiencing this illness, and it's getting hard, it's presenting a strain, um, but they made a pact before things got when he well they made a pact when the diagnosis was
Mhm.
first announced and they learned of it, and agreed that no matter what, until it gets really bad, they want to stay in the home.
Mhm.
So they made that pact, they agreed, and now it's, a number of years down the road, maybe not many, and with some, maybe it is, but it's getting harder and harder on the healthy spouse. But they don't know, or I shouldn't say the healthy spouse doesn't know how they're going to be able to afford to keep the promise and bring in or get the help that they need to look after the spouse that's ailing. And that's where a reverse mortgage comes in handy because they can secure a personal home care
Mhm.
provider like a PSW. Um, it could be maybe it's not that extreme. Maybe we're not dealing with dementia or Alzheimer's. Maybe, they don't have a level lot. There's the backyard's hilly or the front is, and pushing the lawnmowers becoming a bit too much. But can't afford, they can't find the additional funds to retain a landscaper, for an example. Sounds simple, sounds like no big deal, but honestly, to seniors whose incomes are at the lowest level of their life at this point, they're collecting OAS and CPP. If they're lucky, they've also retired with a pension from their employer when they were working, and it's still tough. You know, this again is where a reverse mortgage can come in handy. Now I'm going to flip it and say some people want to get a reverse mortgage because they want to help a grandchild through school, and or they want to help an adult child get into the real estate market and assist them with a down payment. That also is where a reverse mortgage comes in handy to enable them to afford to do that. Um, there's traveling, there is just finally doing the things they always wanted to do, but they couldn't afford. The reverse mortgage is just, it's an amazing answer and solution to the vast amount of needs or desires that anybody may possibly want when they're in their retired years.
So, in that case, maybe give us a little bit of an idea about how, like, how does the loan get determined for?
Well, I think I touched on that in the
Yes,
beginning,
yes, you did touch on it.
but I will I will go there again. So the loan amount is truly when we're going through the process, they filled out the application. The application, I should say, has been submitted to the lender. We've received a commitment letter, and it's conditional. We have to meet the conditions. One of the conditions is to get an appraisal done
Okay.
on the
Hmm.
property. That's what the lender wants to know is what is the home valued? What is the current value of that home? And then they look at the report, and yes, they'll confirm absolutely qualifies for 34, 36,000. I mean, percent. And because they're 65 years old, the youngest of the two, if it's a couple, it's always based on the younger
Okay.
aged individual. And in that particular case, as an example, let's say it was appraised at $1 million. Well, they would be qualifying for $360,000. And they go from that step, they submit all their documents. One of the mandatory requirements is that they get independent legal advice. So they then have to make an appointment with a lawyer and go and sit with them. And the independent legal advice is actually it's mandatory and a must through our federal government to ensure a few things that the individuals that are getting the reverse mortgage are of sound mind and judgment. They are well aware of what they're doing. The second is that to ensure that they understand the mortgage contract, all the contents therein. And the third is that they're not being pressured
Hmm.
by anybody to sign the mortgage contract, that they are truly doing this because they want to do it. Um, and that's really what independent legal advice is about, but it's meant to be a safety net. So their
Hmm.
legal costs may be slightly higher than ordinary, but it's to protect them. It's to their benefit. So once that's obtained and provided, the certificates are provided to the lender, then the file is instructed to go to funding. And it's really that simple.
I see. So,
Hmm.
so I know you mentioned about, 65 and the younger person. So what if the younger person's like 50 and the older person's like 60? Like, then
They
what
would
would
they
the
wouldn't
amount be?
they wouldn't qualify.
Ah,
Because the younger of the two, you have to be a minimum of 55 years of age.
okay. Okay.
And at 55 years of age, if the younger of the two is 55, they would qualify for 15% of the equity.
Okay. All right. So it's just as you get older.
As you get
Okay.
older, you qualify for more.
I was going to ask you about the step by step, but you've actually covered it in this question that I asked you. So I'm going to skip asking you that question.
I'm
And I just,
sorry, Jacqueline.
that's okay, because I have other questions. Anyways, um, you know, I kind of want to ask this question. It's, please, it's a tough one because there's a lot of myths and about reverse mortgages. I
Oh.
obviously had some reservations too about reverse mortgages at one point. And so, um, I kind of want to ask you, what are some negatives that people, or what are some myths that you can debunk for us that people think of when they talk about reverse mortgages? That's a lot. I asked a lot
Uh,
of
it,
that.
Actually, you know what? No, you didn't, and I'm glad you're asking because it's true. A lot of people, I should say, a lot of Canadians have the wrong idea about reverse mortgages because of what they've heard. through a friend, through family, through something they read online, various comments that are made online with reverse mortgage ads, etc. I'll tell you, I'll start like this. One of the myths that I hear commonly is, oh God, no, I don't want a reverse mortgage. I'm going to owe the bank more than my home is worth by the time I get to the end of the term. That is a huge myth. It's not going to happen. In Canada, we have what's known as our reverse mortgage providers, that is. They come with a no negative equity guarantee. So you will never owe the bank more than what your home is worth or the market value of your home. So what that means essentially is if the worst happened and we had a market crash, the lender's going to take the loss, not the client. So does that help?
Yeah,
And that's
definitely.
that's that myth. The other myth is people assume that because they still have a mortgage, usually small, because if they qualify with their age, they're up there, they've had a mortgage for a while and they've paid it down reasonably, but they still have one. They automatically assume, oh, I'm not going to qualify. That's not true. Many a reverse mortgage will pay out the current mortgage that they have on title, registered on title, and there usually is enough funds left over and proceeds for them to, have to do what they choose to do and eliminate that mortgage that is costing them by those costly mortgage payments. The interest rates are higher now, so that makes it even that much harder to afford to be in their home. And if they sell and decide to rent, these days that's not the best option either. It's not very secure from what I hear in the news. Another myth is, oh, no way, I'll never get a reverse mortgage. The lender's going to take my home. False. And I want to premise this. I mean, I could go on and on. A lot of these myths that turn people off and they don't even want to consider a reverse mortgage is they've heard these nightmare stories. I'm going to say that some of them could be true, but they didn't occur in Canada. And I'll tell you why. I'll use our neighbors to the south of the border, the United States, because I know this to be a fact, that in the United States, let's say, I don't know what their total sum population is, but I believe it's around 350 million. Forgive me if I'm wrong and off, but I think I'm pretty close. They have approximately 120 to 150 reverse mortgage providers. And guess what? All those providers are private lenders. And that's where these stories come from because, yes, in all probability, there could be some truth to them. But when you're dealing with a private lender, even here in Canada, anything's possible because we have a vast array of, it could be an individual, it could be a small lending company, but imagine that you're playing by their rules, and from lender to lender to lender, the rules are different, the rules of engagement. Pardon me. And I'm sure there's some good ones. I'm sure that people have received reverse mortgages in the US and they didn't experience anything derogatory at all. But for the many that did, that's where these stories are coming from. That's where they're being shared. And you know how stories get broken down or exaggerated. Transferring from mouth to mouth and person to person. And I'm going to say here in Canada, number one, the reverse mortgage providers that we have in Canada are federally regulated Schedule 1 banks trading on the stock exchange, the Canadian Stock Exchange. And the federal government holds them, as tight-reined as they do CIBC, Scotia. They're the same level. So it is a very viable, safe way for seniors especially. That's why it's designed for seniors, because they are at the lowest income stage of their life. And look at how inflation hurts even us younger people. Well, imagine only bringing in between $21,000 and $22,000 a year. Stats state that the average senior living in their home is running a $25,000 deficit every year.
Yeah.
That's horrible, and it shouldn't be. They've already paid their dues. But things are that much more expensive. And a reverse mortgage is a viable solution for them, whether it's because they need the additional funds just to have a safety net and have a nice, healthy balance to manage the unforeseen that may occur, or they want to gift their adult children or their grandchildren, help them in school with a partial early inheritance, like a down payment or their education. Or they themselves are maybe 70. 70 is the new 60, as 60 is the new 50. We're living longer and we're healthier overall. They're 70, 72 overall in decent health, and their doctor gives them the red light that, yeah, go travel, get good health insurance, etc. But go. You have my seal of approval. So it's all kinds of reasons. All kinds of reasons.
Mm. Yeah, interesting. Um, with with how many providers are there in Canada? You said there was 100 and something in the US. How many are there in Canada? Like,
Honestly, Jacqueline, I don't want to get myself in trouble with any
okay,
colleagues, but
okay.
I am going to tell you
Mhm.
there are two Schedule One banks,
Okay.
financial institutions that provide reverse mortgages. That I will say. There are a couple other providers, but I'm not well versed on them. I stick with the two. I stay with the two Schedule One providers. They're both excellent. They've both been providing reverse mortgages for decades in this country. Um, they know their stuff and they have good service, and that's also important.
Yeah.
And of course, my clients have me. It's not just to do the initial transaction, but they have me to turn to always. For years. It's a relationship we're going to become, because personally, I would prefer to deal with, whenever I have a question about my mortgage or something I'm thinking about doing, I want to talk to the same person every time.
Mm-hmm.
I don't
Mm-hmm.
want to call somebody's customer service and I'm talking to different people every time I call. It annoys me now for other things and other
Yeah,
reasons.
yeah, I hear
I don't
you.
know about you,
Yeah.
but imagine being up in age and they remember the days when relationships mattered. They could walk into their branch to go to the bank because you had to do everything in person and so on, no online, no
Mm-hmm.
bank machines. And the bank manager walked by and say, "Hey, good morning, Charlie." And they knew them on a first name basis.
Yeah.
They miss that. They miss that relationship, that rapport. Um, and that's what I'm here for. As if they get their reverse mortgage with me, they've got me to turn to and speak with about their mortgage for many, many years, hopefully to come. Anytime, for any reason.
So let me ask you a question. Let's just say someone decided, they're 65, they can take out like $360,000, but they don't need all of that 360, right?
Yes.
Maybe they just need a little bit. Like, now, like, is that because they approve, they have to take all that amount, or like,
No.
how does it work?
So, as I mentioned earlier, you're approved based on your age and the appraised value of your home, a certain percentage. So let's just go with a number like 500,000 was the approval amount.
Mhm.
Um, and they're like, but I don't need 500,000. I only need 200. Well, that's okay. But they've been approved for 500,000. They can take the lump sum of 200,000. But guess what? There's 300,000 still on account. They're not being charged interest for it. But if a year or two goes by and they decide they need, for whatever the reason, additional funds, all they have to do is make a call And within 2-3 days, it's directly deposited into the account, the amount they requested, and then that gets added to the balance of their loan. And,
What if
and
they wanted like a monthly stipend as opposed to like a big
yes,
amount?
they can do that too. They have to take a minimum, a small lump, a minimum of 25,000,
Okay.
and then they can set up scheduled payments. They can set it up that they receive 1,000 a month, 2,000 a month. I
Hmm.
mean, it depends on how much they've been approved for, obviously, and what their needs are and what they intend to do. But they just want to feel like, some people just want to feel like they have that much more to work with
Hmm.
month to month, whether they need to spend it or not. They just want that peace of mind that if they're side blinded, suddenly the car breaks down and they need to replace it, it's not worth fixing anymore. They can manage that. If the furnace quits, they can manage it. So that's one way. They can set up scheduled payments quarterly, monthly, one lump annually. Um, there's a lot of flexibility in answer to your question, and they can set it up from the beginning through me any way they like it. So it's a
Interesting.
lump sum or it's a smaller lump sum, and there's still more there on their account that they're approved for, whether they touch it or not. It's there for them. And what that means, if they do want ad hoc style to access additional funds that they've previously been approved for, they just make the request and they get those funds. And it's theirs. They don't have to go through the application process all over again. It's already been approved. So it's
I see.
very, it is a great product. In my mind, I mean, come on our conventional traditional mortgages, we don't get a no negative equity guarantee. If the
Mhm.
market crashes, guess what? We still owe the
Oh
bank,
yeah.
right? So, and what's lovely is, you're talking about interest rates that are single digit, not double digits like credit cards, which is difficult for seniors to be able to make those payments because you're talking about anywhere from 13.99 all the way up to 29.99. Just depends on the credit card company and the type
Mhm.
of card they have. So yes, it's a product that I offer. It's a niche of mine over and above the other traditional mortgages I
Mhm.
also provide. Um, but I care because, and I love it because the clients themselves. And I've seen time and time again the difference it makes in their life. And it thrills me to see.
Yeah. Yeah. Like I told my parents, like
You got to
I've
talk
said
to
this.
Ramona.
I tell my parents, this is what I tell them. I go, spend it all. Spend it all. Don't leave a penny for me. Spend it all. That's what gives me joy. Make yourself like go on trips, have fun, spend it all. And if there's
Yeah.
anything left, it's a bonus,
That's right.
because
It'll be a
yeah,
pleasant surprise.
yeah,
But they worked. Come on.
so hard. Yeah.
Seniors, they worked hard. They
They
raised their kids, you and your
skimmed, I
siblings,
mean, like
right?
it's yeah,
And they
yeah.
managed to pay for their house. Like, come on, and stay married. There,
It's a lot. Yeah.
right? That's
Mhm.
success. Now go and live. Do
Exactly.
what you want to do. You can't take the house with you.
That's right.
Take a little, live a little, enjoy. They don't have to go crazy with, the money, but if they wanted to, it's theirs. They
Yeah.
worked and sacrificed for it for so many years. Why not let the house give a little back? Why
Yeah.
not?
And quite
Anyway,
frankly, you, I think a lot of times they've like I said, they've skimmed so much over their lifetime, right? Um, I think it's it's okay for them to get permission to, go live a little and have a good time. And you can't take the money with you anyways, let alone the house. You can't even take the money with you. So, when you check out without anything, right?
it's
You leave the
true,
way you come in. But
true.
as I wrap up, and I know I asked you some tough questions, but as I wrap up, I want to make sure do you think, I've asked you stuff. Did I miss something? Something you want to add? Um,
Um, I did miss one of your questions, and that was with regards to downsizing.
mhm,
I think it's important to know that a reverse mortgage can be used successfully for that. Um, if you have senior clients and they've decided, you know what, we want to move into a condo. We never thought we'd get to this point
mhm,
where we wanted to live in a
mm,
condo. We loved our house, um, and so on. But the cutting the grass and the snow and it's just getting to be too much. And it's just us here.
mhm,
Um, we don't need all so much room. So we've decided we want to sell and we want to downsize to maybe a two-bedroom condominium. Well, the reverse mortgage, depending on the amount they'd qualify for, if they qualify for enough, and again, it comes down to their age and most importantly, the evaluation of their home. Um, they can go shopping with their realtor and look for that downsized home while their home is being prepared for the market to be listed. Maybe there's some painting that has to be done. The carpet, the shag rug,
mhm.
wall-to-wall shag rug in the living room and family room from the 70s, it's got to go. So there's some things that have to be done before the home's going to be ready to yield them the best return, right? And you would know that best being a realtor. Um, but a reverse mortgage, taking it out on the same property, on that home, to give them the funds to begin looking. And if they find something they both really love and can see themselves in, it just ticks all their little boxes. Um, there they go. They've got some funds, they can secure it, and the reverse mortgage, when the home does sell, gets paid out. So they're right back to being mortgage free and done. It
Perfect.
it sort of acts as it's a bridge,
Yeah, for
essentially.
sure.
Yeah.
Well, I want to thank you for your time today. I had so much fun talking to you. Um,
Thank you.
I mean, you're a wealth of knowledge with regard to
You're
this topic, and
Thank you for that.
yeah, it's good to, I'm gonna have to re-record a video I did because I was like, I didn't know all of the details, so now I'm gonna have to re-record it. Um, thank you so much. I appreciate it. I appreciate you coming on and spending your time with us. For those of you listening at home, I appreciate you spending your evening with me, especially your dinner hour. Um, for those of you who don't know me, I am Jacqueline Watson. I'm a realtor with Sutton Group Tower. And my guest today is Ramona Harris. And so, Ramona, where can people reach you before we sign off?
They can reach me, they can call me 647 550-9839. They can email me ramona.harris@mortgagegroup.com. They can send me a direct message through Instagram, Ramona Mortgages, a number two, ZTMG. A little corny, but at the time I was creating the profile, I was like, what am I going to do? Also on Facebook, they just have to search my name, and I come up there as well. Uh, very easy to find. Google me.
Perfect. Perfect.
Well, it was
And if you don't know
my
how to
pleasure,
reach her,
Jacqueline. Sorry
yes,
for cutting
no, no,
you off, but it's
no.
my pleasure for coming on, and I want to thank you for inviting me to join you
Yeah,
tonight.
I'm so glad you did. Thank you so much. And for those of you watching at home, as always, thank you so much for your time. So appreciated. And until next Monday or next time, I'm not sure who I have next. I do have a show next Monday, I think. Anyways, until next time, we'll see you then. Bye.
Good night, everybody. Bye bye.
Bye.